Hey everybody, hope you're having a great weekend. It was still a little bit of a crazy week, even though it was shortened with Thanksgiving. We did have quite a bit of movement. We were a little bit down. We bounced back. We've been talking about this potential melt up towards 60-50, which was my favorite scenario. Just too many positive things happening out there between corporate buybacks and CTA starting to buy, volatility targeting funds, just general end of year kind of catch up playing by a lot of fund managers. Again, a lot of them have underperformed, and so they're sort of facing this, end of year pressure to kind of get back on board as they have those difficult conversations with clients. Why have you underperformed? Oh, well, okay, don't worry, we own these stocks now. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. So a bit of that going on, and really we've had a couple of opportunities lately to crush premium, and volatility has come down after the election. We played that vol crush really well, about 5 or 6 different ways, and again we had a pop up into, we talked about this, it happened a little bit earlier than I thought it would, a few days earlier, but we had that pop in vol up into the Nvidia earnings. I said that was the next big moment that is going to give the markets a bit of pause, and then that was our next opportunity to basically play the vol crush again. So the vol crush game has been fantastic this fall, as well as the long vol game, which was great in October, not as good in November. That's when the vol crush started happening. So, it's good. You got to sort of learn to pivot and see where that opportunity is. You're looking at VIX futures, you're looking at the VIX, you're looking at overall sentiment. You've got to make some calls on markets as well. And I've been saying, listen, we're probably going to head back towards that JPM call strike at 60-50, and that is exactly what happened over the last 9 days since we put this position on. So what did we do? Well, we put on the Iron Condor, but what I did was, normally this Iron Condor is typically a very kind of neutral strategy. That's what I really love about it. I teach you all about how to do it, what kinds of environments to do them in my Nomad course, but essentially you're looking at generally doing it in sort of mid to high volatility, and it's a trade that really a lot of people think it's about theta, but it really is a lot about vega, that short vega exposure that you get. And so back on November 21st is when we looked at this. Markets had kind of bottomed. We had this nice little sort of pattern here. We'd broken out in the SPY, retested that breakout spot perfectly. Amazing how charting really works a lot of the time. And then we kind of like bounced along the bottom there against that trend line before starting to make our way up again. So as soon as we started to make our way up again on the 21st, I said, aha, that is it. We're getting a little bit of a confirmation of that strength coming back into markets. And boom, put on that SPY Condor. This time I leaned long, and this is because I had this idea that, look, we're probably going to move up, we're going to have volatility come down, and it might be a strong move. And the problem with condors is, especially a shorter term one, as I'm going to show you in a moment, is if you get a move that's a little bit on the big side, you start to threaten that upside, right? So I took a chance and I said, look, I'm going to sell the lower at the put strike at the money, instead of sort of going out to that typical 15 or so delta. And I'm going to show you what that looks like here. Sold the 15, sold the 590, bought the 585, and then I went quite high on the call strike, because I said, you know what, this is the kind of market where you could just get a strong move up, and I do not want to get too short deltas. And we're now short deltas. So we started off, we're long deltas. That's a little bit unusual to be this long deltas on an Iron Condor, but that's what I wanted. I basically sold that at the money put vertical, that bull put spread, and really kind of leaning to the upside, which is a way to kind of introduce a little bit more delta into it. Remember, you have a lot of different option Greeks at play here. You've got your delta, which is now to the upside. You've got your short vega. You've got some positive theta, of course, in this kind of strategy. And so you're kind of manipulating those Greeks to really give you what you want, which was for me a move to the upside, towards that 6,000 level again, and potentially threatening that 60-50. So we've gone from long delta we won't worry about gamma. We're long some theta, which is great. We know that the passage of time is going to help us. We are short vega. This is really, really a key Greek to the iron condor and really many things that you do in the short options world. And so here we are, we've run up $13 on the SPY, and we are now short delta. So what happens here is you go from the situation where you've zoomed up to the top of this real-time P&L. Remember this blue is the expiry tent. The expiry tent is always good to look at, but as we know from butterflies, it's very impressive. Hey, look at all this money that I could make way up here, especially with a butterfly. You're like, wow, look at this beautiful tent. I'm going to make all this money potentially. You and I both know that we are not going to let these things get that close to expiry. So but it is nice to see how this reacts towards expiry, because of course this line is going to move up towards that blue line the longer we wait and the more we sit within this tent. So we've ridden up this curve here. Now we're going to start to ride down a little bit. What can help us here? Well, a further drop in volatility can help our delta, right? Remember, delta is dependent on implied volatility. It is going to change depending on implied volatility. A 15 delta is going to be a lot farther on Tesla than it is on J&J, right? So, and as the volatility starts to come down, it helps us, right? So that's going to help our short delta exposure. So as long as we move up and volatility comes down, that's going to help our delta. We may have a little bit of a negative impact on the P&L, but that should alleviate itself from a little bit of a dropping of volatility. Now, I will say that vol has dropped. The VIX is at 13.5. We've been calling for a big crush in the VIX. That's exactly what's happened. Our long VIX 15 puts are doing fantastic. Our fly is doing fantastic. Again, we kind of crushed it on these vol crush trades. And that's what this really is. This is a bit more of, VIX is very pure, right? So when you trade VIX, it's pure. You're not really worried about strike risk as you are with a strategy like this. This has strike risk, right? If this thing moves up too far, I will have been right on direction and volatility, and I'm going to still lose money. With the VIX, I can play downside, very pure. I told people in the community that a couple of weeks ago. I said, this is the most pure way you can play it, because you do not have to worry necessarily about where the market goes. It is merely a bet on volatility coming down, calm coming back into markets, people starting to look towards that Christmas season, that quieter season. That's really the advantage of playing sort of a pure volatility strategy like the VIX. But this is another great expression of that. I just needed to lean it to the upside, right? So that I could capture a reasonable size move, because in my view, it wasn't going to just sit around, which is really how you kind of typically set up an iron condor. You expect things to sit around. It's this great uncorrelated way to do well, as long as markets are kind of not really drifting too far in one direction or the other. So here we are, we're up in here, we've got very nice theta though. Even though our delta is threatened, we're going to have a little bit of a cage match between theta and delta, and a little bit of vega involved here, right? I think there's a little bit more room. The VIX is 13.5. It can certainly get lower. It can drop another point or so as we head towards the holidays. So Vega is kind of like hanging out around the cage, but these guys are battling it out, right? Delta is getting hurt. We're getting hurt a little bit to the upside. Theta is something we're generating every day. We're going to grab that 20 bucks. It's a beautiful thing. So we're going to have a little bit of tit for tat with those two Greeks there, with Vega kind of sitting around in the wings. And so we're going to see how these play out over time. Now, eventually, we're going to take this off. There's a good chance I'm going to take this off this week, maybe in the first few days, because we're starting to get into that under 30 days to expiry. I know I put this on shorter than I normally do. Normally, I'm looking for kind of 45, 55, 65, even 75-day iron condors to capture that beautiful fat part of that decay curve that everybody gets wrong. It's not the decay curve that you guys think it is, that all the sites and all the all these gurus talk about. That's not your decay curve. We'll talk about that in another video. That's typically where you're going to really get all that torque. Here, you're starting to run a little bit low on time, and that means this gamma is going to start to get a little bit too high for my liking. So I am targeting about a 110 target level for this credit. So we sold it at 217. I'd like to get down to about 115, 110, and then I'm going to take it off in there. Unless we start to threaten, I don't think this is going to happen, but if we start to threaten 610, then I might get a little bit nervous and just take it off wherever it is. Or I might look at adjustments, but I'm not really huge on adjustments. So that's the plan for this thing. Really great to think about how Greeks come into play to really inform how you look at something, right? So you really want, I mean, look, I think in the end, you've got to have an opinion on markets. And even with an iron condor that is tends to be kind of opinionless as a strategy, sometimes it's good. I don't do this often, but I did lean this one up, and I think there was some good money to be made. And we have all the Greeks kind of working in our favor right now. Let's see where things end up this week. I think we have a little trouble getting through that 60-50 level on the SPX. I think there's a lot of gamma there. There's a lot of sellers, a lot of hedging going on between that and 6100. We shall see. We can smash through there like the Kool-Aid man through the wall. But right now I see a really big wall there. I'm going to chalk up Friday to a little bit of exuberance due to a lack of liquidity and Thanksgiving turkey on the brain. So we'll see what happens. It's going to be an interesting week. We see a lot of gamma disappearing next week. So I'm not saying that we can't keep going, because there are other things happening. I mentioned in my last video what could happen because of this potential to get into a negative gamma picture. That could be very impactful to markets over the next couple of weeks as people experience more FOMO and the tailwinds that I talked about keep pushing markets forward. So let's see what happens, and it's going to be a fun week again, and we'll see you in the next video.